Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Monday afternoon, we have Joyce, Managing Director of Nasdaq's Market Intelligence Desk, to discuss some technical levels to watch in the Nasdaq-100. And Brian, of course, this is Monday, October 4th, and quite the volatile day for Nasdaq-100 stocks as it's underperforming the rest of the major averages. We're certainly seeing the pressure in many of those tech names.
Yeah, we've seen the volatility picked up over the last 2 weeks now, and really since the FOMC and the day afterwards when we saw the rates market spike higher on the long end of the curve, we've seen many of those larger cap growth names, a lot of them in the tech space, really begin to see some distribution. And they had previously been holding, the markets up and the major indices up, so to speak. If you had looked within the S&P 500 or the Russell 2000, a large percentage of those stocks had corrected more than 10 and 20%. And we didn't really see that as much within the Nasdaq 100. And I think with the rates shooting higher, that's having more of an impact to the downside for a lot of these growth names.
Right. And Brian, I also think a big part of the narrative is too, outside of inflation and interest rates. Actually, inflation is part of this conversation, is the supply chain issues that we're having, because it's not specific just to retail and to cars and so forth. It impacts virtually every sector. So you have, so much supply. You have so much demand, not enough supply, right? And you certainly don't have enough labor to get said supply onto the shelves. And it just seems to be that's exasperating everything.
It's amazing. I was just out this weekend at a local apple farm, and they were complaining to me, one of the employees, how they normally hire 120 people and they can barely get 80 people. And the conversation came up because the lines were so long, and it was just a head scratcher. But absolutely, we're seeing inflationary forces really begin to spread now amongst various types of commodities. Oil spiking higher today, just breaking out of a 7-year range around that 77 level. Last month, we saw cotton break out of I believe it was an 8-year trading range. It was up 15% in 1 month. Natural gas was up 35% last month. We're seeing the bottlenecks at the ports with a lot of these ships that can't even get in to unload their goods. So certainly having some major problems here. We have an energy crunch as well with natural gas and oil. So there's concerns on the supply side. There's concerns on the demand side as well.
Yeah, there certainly is. And it's funny because where you pick apples where I live all the way, in New Jersey, you're on Long Island. They didn't even have pick your own apples open for the weekend. They just didn't have enough staff to support all the people. So it really is even trickling down to the apple farms. All right, Brian, let's pull up your Bloomberg here. Let's take a fresh look at technical levels in the Nasdaq 100 with the volatility and the sell-off that we're seeing this afternoon.
Absolutely here. So I guess we'll start with the Bollinger Band, because this highlights the 20-day moving average, which we spoke about a couple of weeks ago. I think it's about a week and a half ago on Thursday, the day after the FOMC. We had a rebound higher in the Nasdaq 100. And I was glad to see it fill the price gap here. But the second level I was looking for the NDX to get back above was this 20-day moving average. And it clearly did not. It peaked just below it and is now rolling over. Friday, you can see this is Friday's candlestick. We did have, a bullish reversal. We made fresh new lows on this downtrend, but we closed well above the midpoint of the prior day's range. So we formed kind of this green candlestick is what we call a hammer candlestick, and as well as a hammer eye, which means the body of this range is within the prior day's body, the open and closing range. But we did not see the upside follow through today. Quite the opposite, strong moves to the downside as well. What I've been and what many other people are plotting as well is, if you take a bit of a zoomed out look in the NDX, you can see a bit of a head and shoulders topping pattern here. The range here is about 923 points, which projects a downside move to about the 13,850 level, which is down about 4% from today's low. And then accordingly, you could also move your neckline down to this 14,445 level. And if that were to give way, you could potentially, be projecting an even further downside move to where this market could go to. I'm not in that camp yet. I think maybe what is potentially more realistic is that initial neckline here and we get it down to 13,850 and then reassess from there. I do think we're seeing, broader areas or different areas of the market outside of the growth space. We're seeing the energy stocks. They had a great month in September. Banks were down a little bit. Well, I should say the financials index was lower, but banks actually, the KRX was higher. So we are seeing some select pockets performing to the upside, and we've seen some relative performance there. September is traditionally the worst performing month of the last 10 and 20 years. It's the only month with average negative declines over the last 10 and 20 years. And so we did just see that now this September. There's also been a lot of headwinds within the marketplace because of the increased political and regulatory risks currently underway, not just here in the United States, but also in China. So there really is a lot going on. I really think, what you had mentioned earlier regarding commodities, the Bloomberg Commodity Index is having its biggest annual move since 1979. It's 42 years. So just a lot of pricing pressure, a lot of headwinds, cross currents, impacting the markets here. And I do think this volatility and this corrective price action is somewhat healthy. The markets, especially the NDX, have been largely, running higher for quite some time now.
Right. Agreed, Brian. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.